Mr. Csaba Robert from Fusion Capital.
Actually, today I represent Midcal.
Yeah.
But yes, I am also partner of Fusion Capital, and thank you for Jack evangelizing blockchain and technology, and also for Shane about talking about gateways and crypto. I really like the structure of tonight, actually. We were coming from technology to something which is a little bit more abstract into tangible things like portfolio management with Andrew. And well, what I'm going to talk about today is one of the teams we're working with. I'm also wearing an entrepreneurial hat in there, is custodial services in a decentralized manner for digital assets. And just to tell a disclaimer, so this is an actual investment pitch, but we are not soliciting investment today. It's not an offering. I just want to make this really clear that this is not the case today, but you're going to see an actual pitch deck. So what is Midcal? Midcal is actually active in the security token space for the past 14 months. When the team started working on security tokens, everybody in the space we started talking to said, we are crazy, this is not going to fly, this is not going to work. Everybody's still talking a lot about cryptocurrencies, payment tokens, and utility tokens. What we see as a trend today, that there are more assets with fundamentals that are trying to come on blockchain as a technology, right? Assets which have fundamental value, assets which have connection to the real world. What we're talking about shares of companies. There are security tokens offerings in the US. There are several security token exchanges who are trying to scale today globally. Real estate is coming onto blockchain, all sorts of things which are trying to figure out how they can take advantage of the decentralized new world. So, what does Midcal do? Midcal started helping structuring some of these deals from financial, legal perspective, and then ultimately started developing its own products. One of them is One Vault, which is a decentralized custody solution for professional investors and institutional investors. We have heard today about the potential, what is the magnitude that we are looking at right now. So ICO funds raised today approximately $18 billion. Wow, maybe it's a little bit more because this has been dated at the end of July. So probably this needs to be refreshed. Crypto market capitalization is hovering around $220 billion today. And we're dying again.
Sorry.
Yeah, no worries. But what is more important, that those assets which are out there in the traditional financial world today, and by traditional I mean non-crypto, those assets are $71 trillion. So if we get back our chart here, sooner or later, you're going to see that, well, it's a logarithmic scale. We're looking at magnitudes here. Here it comes. So we're looking at magnitudes here. This is logarithmic scale in billions of dollars. This is $71 trillion worth of assets out there being held by banks, custodians, investors, family firms, family offices, asset manager firms, all sorts of assets which are out there today, which is not currency, right? So this is potentially something that can come onto blockchain over the next 3, 5, 10 years. Who knows what it's going to be. What is missing? There are a couple of things which are missing. Obviously, foundations are missing in terms of the infrastructure. How are these assets going to be governed? Who is able to trade them according to rules of what jurisdiction? So all sorts of things are still missing. But definitely the potential is there. Institutional investors are looking at this. And also, you have a number of other professional investors, family offices, high net worth individuals who are looking into trialing and piloting, working with some of these assets. Foundations are improving, there's tremendous growth opportunities, and people are certainly trying to build a diversified portfolio, be it cryptocurrencies, be it other assets that are coming online, probably starting this year, which have a little bit more fundamentals. We have heard today about self-custody, right? You hold your own tokens, you have your wallet, either a hot wallet on your phone, maybe you have a cold storage solution at home, a ledger, a trezor. You have somebody else doing this on your behalf. Self-custody is not always a solution. So we have spoken to multiple professional investors who are again afraid of losing their keys, and Andrew has touched on today. There is certainly a need for some firms providing custody. What you see out there today, there are a number of firms already providing these solutions. Here are some of the product features: cold storage, basically credentials, mandate management that people are looking at. So similar to a bank, I personally wouldn't be able to wire $5 billion of funds at my own will. We'll have to have a number of signatures to be able to do that right in a bank setting. If we're talking about assets, let's say it's a piece of real estate, I don't know, the Shangri-La Hotel here in Singapore, then I wouldn't want to be able to transfer it on my own as a title from one owner to the other owner. Basically, it needs a number of signatures, so it's safe and secure, right? Here are the customer segments: institutional investors like major bulge bracket banks, family offices, high net worth individuals, and also other digital asset owners that are requiring basically such a solution, and especially when it comes to connecting real-world assets to their digital representation in the blockchain world, there's an even higher need. Many people still today do not understand how to use private keys. They are not comfortable with technology, they are not tech savvy enough, right? There are additional requested product features like audit reports, reporting. These are more for financial transparency perspectives. So what Mythka started doing is started building an ecosystem around this. We are talking about one vault specifically here, which is already running as a prototype, and currently the team is in talks with a number of institutions which are trying to figure out how they can come online. The difference is that this is going to be a decentralized solution. So what you see there today, some exchanges, other providers are providing custody as a service for crypto assets. Again, we're talking about centralized solutions. We're not talking about the true nature of blockchain and how that can be brought to the next level. There is also additional features. OneID, which is using a bank-grade full audit trail KYC online. So basically, from the comfort of your armchair, you can pretty much become an investor from here in Singapore into a property in the United States, fully going through a KYC process, fully onboarding yourself like you would do in a bank when you go in front of the teller and you identify yourself with your documents and ID and all the required things. OneDash, which is going to come online in 2019, is governance and administration services layer. I'm going to show a couple of slides a little bit later today on these. And the team started structuring a couple of digital structures. One of them is a digital real estate investment trust, well, similar to a real estate investment trust. We're looking into digitizing basically a security token around one of the operating entities with which the team is working with. And well, public chain assets as cryptocurrencies are going to be tied in through bridge chains. Who's going to run the network, this centralized network? Yes, it's going to be a permissioned private network. It's going to run on a number of trusted nodes. And who can become these nodes, that's still being worked out at the moment. So there's going to be a different level of roles and what these roles are available to do on the network. But it's all designed for all these digital structures and basically mimicking the complete financial system in a decentralized manner. So here you see the short diagram of how the network is going to look like. You see a number of roles where Mythka itself is sort of providing the technology, tech services behind it. It's also going to provide a licensed custodian service. So it's the team is getting there to gear up for this. And there are a number of other players here. You see institutional custodian agents, see many banks that potentially, like brokerages, hold your shares that you have in SGX listed companies today or NASDAQ listed companies today. In a similar fashion, they can provide these similar services in the network. But what you see here, what Ripple did for payments, interbank payments, Mythka is going to do that for real-world linked assets. Brokers, asset owners can submit transactions, and basically it's going to be replicated throughout the network. The network itself is based on a Raft-based consensus engine, which, as it turns out, JP Morgan is exactly working with the same thing. I think our team is a lot leaner. What are the roles? So this is what's still being worked out. There's going to be super nodes which are going to be partially operated by Mythcal and some other players. There's going to be other custody nodes who are holding effectively assets. These are licensed providers because today custody services is a licensed activity globally, at least in multiple jurisdictions. And there's going to be other nodes who are bringing on assets. They are not going to act as custodians, but they can initiate potentially transactions. And then there's a user interface which is being built currently where other asset owners, asset managers can access the platform without running their own node on the system, on the platform. This is just a couple of key value propositions of what one vault is capable of doing. Yes, decentralized, it's going to be working with assets which are real-world assets, basically backed tokens, if you like, or stable tokens, if you like the term. It's going to work with a number of region-specific solutions that relates more to the financial and legal structures. So we started generating expertise there 14 months ago before everybody started doing that. Currently, we have a documentation package where you can structure a security token in 6 jurisdictions, potentially fulfilling the requirements of United States, United Kingdom, Dubai, Singapore, and Hong Kong at the same time, and be listed as a private security at the moment. And it's going to have multi-layered security architecture on a private trusted node network, and it's focusing on ethical and sustainable inclusive growth. What this means is that what the Mythcal team is aiming at is that it's not only those people who already have a lot of money that will be able to become investors in such projects, but basically trying to figure out how you can establish a sort of a midway between the completely decentralized, unregulated crypto asset space and the very strongly regulated securities asset space. EU is already looking into this. I think the SEC is already looking into this, that how you can sort of enable fundraising opportunity, fundraising avenue where retail investors would be allowed to invest, let's say up to a certain magnitude, or a certain number of investors would be able to invest in such even early stage projects or more mature projects as well. And we are looking into creating a platform where it also has, oops, sorry, what did I press? Well, it's going to have features for custody for trust fund and pension plan functions as well. So, because custody in that sense obviously depends on when do you custodize certain assets, for how long do you want to custodize them, for what purposes, it's still custody at heart. This is a little bit about the dashboard that I mentioned, the governance framework and one dash. These are some of the features, two-way communications between project owners and basically the people who are investors in these projects. Provides real-time shareholder information, stakeholder level information we're talking about. Also, both on the project side, so project owners know who the people who are sitting on their cap table, who the people who are sitting on their investment table are. So there is no risk in a sense where successful business which is scaling is going to get shut down because there are investors who are actually money laundering, right? And there is a very real possibility today. So I know of a number of firms they raised through ICOs, raised 10,000 Ethereum at a time, and then basically they couldn't bank the money because they couldn't tell who are the people who actually gave them the money. There's going to be secure credentials management, e-signatures, so board decisions can be brought and made through the help of the platform, and then all digital asset transactions can be also managed through the dashboard. So issuance of treasury shares, swaps, dividends, everything that we see today in the traditional financial world would be enabled to do so on the platform itself. And last but not least, with one of our partners, a company called Facecom, is already operating in Europe. So these are their partners. Practically, they are working with 10 financial institutions already. This is a bank-grade online real-time KYC solution. Basically, it's either automatic or assisted by or guided by operators. It has leading onboarding costs. Their throughput currently in the alpha version of their automated solution is 25,000 verifications a day. No bank needs that today, but this is the theoretical capability, and it does have an institutional-grade ID management capability. So at the moment, there are already financial institutions who are using their platform. These IDs are not yet on blockchain. The team is going to bring them on blockchain over the next few months, so it's going to be a self-sovereign digital ID that is going to be utilized. So if somebody is registering with these guys, Facecom, or through our portal in the next few months, then basically you get an ID that is portable and can be utilized across a number of deals or platforms. Here's a little bit of a competitive landscape, right? So there are already custody solutions out there, which I have mentioned, and you see some leading players here like Gemini, Coinbase, some other solutions. I think it was BitGo, which has received, well, a license, a quasi-banking license from one of the regulators in the more exotic states in the United States. None of them are decentralized. So that's one of the key differentiation. You see that, well, some of them have better, some of them have worse user interfaces. They are supporting a number of tokens, but mostly these are not focused on secure tokens. Mostly these entities are focused on cryptocurrencies, Ethereum, Bitcoin, and probably top 10 currencies. And what Mythcal is doing at the moment, it's looking for partnerships with institutions, exchanges, asset managers, people who own real portfolios in the real world out there and who want to digitize that, and offers a co-branded solution at the same time. So it can be potentially run under, so the team is talking right now to a European major bank in Western Europe. They want to figure out how they can become part of the platform and offer such solution to their existing clients under their own brand and under their own name. Another key point, obviously, is the cost, where, for example, some of these leading providers asking for opening a custody account with them starts from a minimum investment of $100,000 to $200,000. The cost of Mythcal are going to be completely different. It's going to be a lot more affordable. It's going to be basically a solution which is attainable by also those users who want to custodize their assets for security purposes, at the same time don't want to do that for $1 or $2 million worth of assets at the minimum. And last but not least, there's a proof of concept currently, as I said. So the proof of concept is already operational. This is being tried and tested at the moment. What helps scaling this proof of concept, there is an increasing regulatory clarity, what's going to happen to all these crypto assets, how are potentially security tokens treated. So you see more and more jurisdictions coming out with rules. One prime example is obviously Malta. There are some other examples which are a little bit more exotic destinations like Isle of Man and Gibraltar and all these other locations. There is demand for it. So our team personally has spoken to high net worth individuals, and there's a study which says that yes, about 29% of high net worth individuals are interested in cryptocurrency or digital assets in the long run. What holds them back is why crypto doesn't become that mainstream at the moment is particularly custody, particularly recourse to certain assets, what they are trying to list on or project owners are trying to list on blockchain, and then the holders of those assets are trying to figure out, okay, if something happens to the technology, something happens to the blockchain, how am I going to hold my title to the underlying, let's say, a piece of land or a building or a unit in that building that I hold as a crypto asset. And certainly there are a number of risks which need to be mitigated. So my Mythcal chose a decentralized framework is that, yes, that's eliminating a single point of failure opportunity there, and it has a number of advantages which will obviously have been well articulated by Czech in the beginning. Team itself is bringing in 55 years of experience from traditional financial services, from corporate finance, bank grade IT products basically that are running in back office solutions, as well as structuring compliant assets throughout the traditional financial world as well. And one key momentum of the entire team is that everything has to be compliant. So Mitkal's own dogma, if you like it, or keywords are transparency, accountability, and compliance. If these principles are not met with any of the partners or the projects that the team is looking at, then basically there is no discussion. It's not because we don't like those projects, we just want to create practically a paragon of transparency, paragon of accountability, bringing potentially private assets, later also potentially public assets, onto the blockchain with the same transparency what you see today in traditional financial markets, in public markets like Singapore Stock Exchange, New York Stock Exchange, or the London Stock Exchange.
One quick question.
Yes,
is it
sure.
okay for you to share your slideshows with the people who are in the room? We'll be sending out an email.
I can send you a separate link, okay?
Okay.
And that's going to be slightly
Maybe
modified.
a
One
PDF
slide's
file.
going to be modified, yeah.
Okay. Right.
And so this is forecast, obviously. We're looking at from 2019 to 2024. The business model itself is bringing in a number of assets onto the platform itself, which are tied to the real world. So again, coming back potentially blockchain listed real estate, if you like, funds, other products, where we see the potential growth momentum is not because Mitkal is active itself, it's also those partners truly in a network cooperating and working together. And coming back to the first slide, I have shown you the $71 trillion assets out there, which can be potentially digitized, right? So that's where this growth is coming from. Obviously, it needs to be, set up first. There is tremendous amount of evangelization that goes into scaling this. And if the forecast is reliable, and I have to tell you, when the team put it together, it's very conservative. In 5-6 years from now, potentially it can become $1 billion business. If that will happen, obviously depends on many factors, besides execution, also the regulatory framework and the number of jurisdictions who are allowing to make this happen. This is the roadmap. So as I said, the team is already working for the past 14 months. Core team was in place early 2017. Started working on the first digital asset deal still in 2017. Contracted for the second one in 2018, and here we're talking about securities tokens. Prototype of the custody chain is ready. It was ready by mid-year this year. And these are some of the. So this is what I said. This is not something I'm going to send you in the link. So there's a different version, but this is a forward-looking estimate of if somebody comes in at the moment. We are talking to potential group of private investors, what would be an expected or foreseen IRR and on multiple on the initial investment. In our case, we are not doing an ICO as Mitkal. It is a private placement that is happening currently for accredited, professional, qualified investors, depending on the term used in the jurisdiction. And it's going to be an allocation of a number of non-voting security tokens, so practically it's providing a dividend right in that sense in the company itself. No voting power at the moment, but it's going to be converted over time into a regular voting instrument at the end of the day. And last but not least, here's the team. So Peter, co-founder, sits also here in Singapore. Unfortunately, he couldn't be here today. He's working with banks, bank IT infrastructures and solutions for the past 15 years. Leon is coming with a legal background. He's the person who's responsible for compliance. He has been working on structures for major investment banks globally, setting up legal structures for them, advising on them. And then there is a very strong base of the technology professionals who are working in blockchain for already a long time, and also have a professional tech expertise for a number of years. This is what I think this is the last slide, what I wanted to show you today. Not sure if anybody has any questions or even suggestions to the deck, which we'd also kindly appreciate. If something was not clear, something needs more explanation, I'm happy to do that.
Any questions?
Any particular kind of assets you want to
Yeah,
start
there's
with? Any particular kind of assets you are initially targeting?
Yes, so we started, it happened to be a real estate-based project basically. Now we do have expertise that there are 4 other projects potentially in line for tokenizing real estate itself as an ERC20 token. So it sits really neatly with the concept of stable tokens or fundamentally based tokens, because there is also a secondary market valuation opportunity at any given time. You go on a property listing website, you figure out, okay, I'm buying this token, it represents this certain, I don't know, ownership or revenue stream of a real estate in a particular jurisdiction. How much do properties cost there? What is their cap rate? How much money do they make in a year? 8%, okay, that's also yielding 8% or maybe more than you can pretty much compare. So that's one of the reasons we look into real estate, but there is also company shares that we are basically early stage venture shares that we are tokenizing at the moment.
How about the inventory of the product itself? Let's say
How would?
inventory of products. Let's say we have a oil stock. So would that be also come under this?
We already had a discussion, actually 2 discussions about putting together security structures for commodities, which, well, it depends whether you want to make it deliverable or not. So there is a sophistication and the complexity. The second one is actually, it's a precious metal resource royalty revenue stream, which is a little bit easier because you don't have to deliver physically the resource itself. It's basically you're receiving a royalty stream from certain projects and explorations.
And similarly for the cargoes as well, let's say.
Yeah. So in our mindset, there's a lot of things obviously that can be tokenized in the financial world today, or financial instruments. We do know of teams who are working on derivatives, debt instruments, a number of things. So there was already, I think it was one of the Australian banks who was mandated by either the UN or the World Bank, I don't remember exactly who already structured and issued a blockchain-based debt instrument, but more to institutional investors. So all these things are happening. What we currently believe that it is a large experimentation. So even if you look at the ICOs itself, $18 billion were funneled into ICO projects. It is still an experiment despite the size of the market itself. Because nobody knows how they are going to work 3 years from now, right? And that's I think what the ecosystem is trying to figure out at the moment.
Thanks.
There's one more.
Yeah, so my question is, we're looking at digital, you're making asset-backed cryptos,
Yes.
possibly. And my question, I guess, is, do you have any thoughts and expectations of how government would respond with fractional ownership of assets, keeping in mind that I believe that in terms of property and assets like that, the value of that, I believe, is the same as all other traded assets. But at the moment it's locked up. And my question is, if it becomes liquid and people start releasing equity in their property, what does that mean for a sovereign nation?
Well, obviously it's a crucial question, right? Which jurisdiction we're looking at if you're talking about specifically property, right? Because some countries allow for foreign ownership of assets, while others don't. So it depends also on this restriction. Taxation. Well, taxation is another thing, right, which hasn't been sorted out in today's blockchain world. I think it's only Thailand, which actually has somewhat clearer guidelines of how they want to tax digital assets. But this is why we consider currently the ecosystem an experiment, because all these rules need to be worked out, right? When it comes to securities, it's a little bit easier because despite the fact what a lot of people are saying, there are clear rules for securities, whether they are running on blockchain, on NASDAQ, or let's say as a private placement in a private equity setting. Most countries, including Singapore, do have regulations for securities with certain exemptions, right? So coming back to your question regarding the fractional ownership, there are already fractional ownership schemes in place. So just for real estate, one thing that falls in my mind, RCI, which is fractional ownership of real estate actually globally as a network. I think mostly in Europe and maybe the United States, but it does exist. That I believe is not a regulated instrument at the moment. However, it also doesn't have the liquidity and the market depth that it makes it a proper financial instrument.
I guess my thoughts are that this is a massive hurdle because land registries across the world are going to be concerned that assets are sold multiple times. They're different between jurisdictions, and anyone trying to put these assets on the blockchain is possibly going to have to work with any organisation in those countries. It's currently all done ad hoc, I guess, in some way, according to local practices. Yeah. So it sounds like it could be a really challenging problem for security.
Well, yeah, I think that's one of the key problems that I think, well, it doesn't forbid, but at least presents an obstacle for crypto and digital assets becoming mainstream, is that technology is global, fundraising is global, the regulatory landscape is not. And it's not only the 196 countries which have different regulatory requirements, but in the US each and every state has a separate one even. So then you have an additional 52, right? So this is the complexity that I don't think can be resolved. Potentially blockchain could help if, let's say, I don't know, the G20 countries come together and okay, they establish a common standard. Today we don't see that yet. Shane.
Yeah. Just want to mention a bit about, I understand your solution is very forward-looking at security solutions. You mentioned earlier that you wanted to talk to some exchanges. Have you actually spoken to any security exchange to offer your custody service?
Not yet. We are in the process of reaching out at the moment. We wanted to establish basically a nascent network and then go out there. But we do know that we are tracking those security token exchanges at the moment. There is probably a dozen, 1.5 projects globally. We do know that there are currently, I think, like maybe 2 dozen, 3 dozen security token offerings which are in the works. And obviously, so these are interesting propositions. Everybody's tackling at the moment this space a little bit differently. People are working on security token standards, which are sort of a fork of ERC20, and some, I don't know, have even proprietary names for that. Obviously, it would be very nice if this is also a common standard and not everybody tries to make a different standard, because then it's going to be a lot steeper hill climb, basically.
So you see that security tokens will come mainstream in 1 or 2 years?
Let me not make a judgment on that. That's why I said 3, 5, maybe 10 years, right? It's mainstream. Well, it depends on the number of things. It depends on the regulatory landscape changing. It depends on how mainstream investors are accepting these assets as a store of value, wealth, basically, or an investment thesis, right? But one thing is for sure, you can still, and what we did, for example, with the real estate project, you can structure a proper investment product, and it's only the last mile that is put on blockchain. Today, in a real estate private equity fund, as an investor, what do you get? It's a pile of papers, practically, which if you want to sell it to somebody, basically that person has to sign the same pile of papers, right? Put it on blockchain, it may become a little bit more liquid, because then terms and all the other things, they are also online, potentially financial data which are attached in our dashboard, somebody else's dashboard, then become transparent, and then there's a higher liquidity for these assets. That's the thesis, has yet to be proven. Oh. Thank you very much.
Thank you so much.